I be talking options, I got lots of those in life. I could get you started, but I can't teach you to drive. I turn on my monitors and swear I come alive. Cash is always liquid, always dripping, never dry.
All right, ladies and gentlemen, I got your watches coming into February 27, 2020, and the stock market is going to bounce tomorrow. You guys like the predictions? Here it is. And I will say, I am positioned for the downside, more puts, even some of our calls even went down that we got today, but I want to kind of talk about this first wave or the second wave and kind of this first phase of what we're going through. I'm expecting pretty much one of two scenarios tomorrow. I'm kind of leaning towards the bounce. However, I think two things are going to happen, one or the other. And then I also want to start getting to look at next week and how things are going to play out, because tomorrow, now Thursday and Friday, it's going to get important here for the Froggers. There's going to be a lot of opportunity with the plays. So I have 3 different plays, actually 4. I'm going to make them very, very clear for you guys. Some of you guys kind of didn't understand those XPXs. Those still did like $40 to $200 again today. But I have 3 different plays and even a strategy that we need to go about in terms of finding some of these plays that we're seeing here. So I got that for you guys. I got the keys, the main topics. I have the plays that we did today and then also the plays we're going to look at tomorrow. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. You could get all of the news, watch the market live in real time, youtube.com/thestockmarket. All we ask is that you're positive and respectful. We made all of these plays live. We've discussed it, and you guys got to see the strategy executed in real time so you could take a look, as well as responding to everything that we saw here. We had a crazy, crazy move from European close, so some of you guys aren't used to that effect to see. It was really cool to watch in real time and see really what got caused from that. So let's get right into it. Before the keys, simply what did we see today? We were testing lows. The market was down a lot more, kind of bounced up here in pre-market, and it was because of what happened in Germany. Germany, it's spreading. They said they're preparing for an epidemic. Again, more other cases, even Brazil. We saw one like Norway or Finland. It's now touching, I think, every single continent. Again, market is still reacting to the virus. And how we even move forward with that is important. But we saw stimulus. We saw more stimulus out of China. But then Germany also said they're going to do stuff to support their markets. And the market took that as good. This was pretty much the main theory I came up with this morning. And I think it makes a lot of sense. And it has to do with stimulus. Essentially, anytime the market got in any wind of stimulus from these countries, investors took that positively. So essentially, after this first drop with the Wuhan, we thought that was, good enough stimulus because, again, China came in, they threw the kitchen sink. The market saw that as adequate, but we only knew so much about the virus, and they're forecasting it pretty much differently. So now that we know more about the virus, you're seeing the market price something in. I think it's pretty much going to move into a range until it could agree, okay, we need to see other countries and the stimulus is not only being provided, but then that it is good enough. So for all you even doom and gloom guys out there, or my tinfoilers, whatever you want to call it, you're going to need like 3 or 4 cycles of that before the market says it doesn't matter how much stimulus, this is something external, but this is how the process works. You guys are seeing, and this is how action is getting taken. But it's also now the timing, like we talked about yesterday, how long it takes for this type of news to absorb. So that was what we saw at European close. Once the markets closed and didn't get that pressure from Europe kind of propping things up, it went down. And that's what I'm kind of thinking now could help us into tomorrow. But here it is. I think we're going to get a big bounce tomorrow, and then we're going to drop back down Friday, either back to where we are now, or the low set, or we might set new lows, or it's going to cuck until the end of the week and maybe be skewed to the downside. So if you don't know what the cuck is, pretty much it's going to do nothing, where let's go back to the old Wuhan zone where it's going to drop, you see here, but then it's going to kind of stay in this range here. But this is something we common see. I'm waiting for the bounce after these big drops. There's going to be some level of mini bounce here. It could be big, it could be a little bit here, and then it's either going to lead to another test like this. This is kind of pretty much visualizing what I'm expecting, or the markets are kind of just going to do nothing. And if anything, that is actually the worst case scenario, because it's going to kill calls and puts as time burns, and then as expectations change, then the market just hits the gas out of nowhere and goes up or down. So that's what I'm expecting, and if I'm wrong about that, it's going to happen next week, meaning that we're going to see something here, because we could still keep dropping. You don't know, and again, I think Friday is going to be a difficult day, but the fact was we had high volume today. The market got got held up here. It didn't move much. We had news about some currency manipulation stuff, or that countries wanted to start stepping in, but we saw weird moves on the yen. Even then, right now, you could see China. That is just a perfect visual of what it looks like to fix and stabilize a currency. But you're starting to see the market got a little bit support and the volume's high. The question you have to ask is, who's buying this? So somebody bought it. Even though it's selling off, the fact that the selling pressure didn't take over and there's a lot of accumulation there, be careful and keep your eye out for any sort of move to the upside. But again, doesn't mean volatility is going to disappear. That is the whole point of volatility. Big moves up, watch what it leads on the downside. So that's pretty much it. That's what I'm going to be looking for. As far as even news tomorrow, we're going to get weekly jobless claims tomorrow, durable goods orders, and pending home sales. Those could have an effect, and that's why I'm thinking you might find something positive to take there, mixed in with now another European session fueled by some of the stimulus, or even more stimulus gets announced, or even now if it takes 3 or 4 days for the market to just get used to now the virus spreading across the world. You guys saw what happened last time. But all we're going to be watching is pretty much the commodities and the currencies, both the laggers and leaders. Today, bonds hit more new lows. TLT was still a little bit weird, but the bonds keep going down. It's not getting reflected through TLT. That's the difficulty with some of these ETFs, but the bonds keep going lower, and this is now telling us something. It's leading to the main thing. This is what I'm going to be looking at next week, and even right now. I talked about this yesterday. Do not forget this. This is important. This is the Fed futures rate. These are the short-term bonds, and pretty much the price of those bonds based on the demand lets you know if the market is anticipating or pricing in a rate cut. When this number gets to 60 or lower, the market pretty much does whatever is above 60. They don't want to upset the market, so the Fed responds to whatever these percentages are at. So you guys see this was 24% yesterday, 6% last week. Now it's up to 35. So if this starts to switch up here, get ready for the Fed to come in and get ready for the market to not only process the news, but also wait for what the Fed is going to do. So that's pretty much it. Let us get into the plays. So this has to do with the strategy. I'm going to go over these plays and show you an example. It has to even relate to the UAL here. So again, all my 6 men out there, we got to play. One of them's looking pretty good so far with some of the after hours moves, but I told you we got you here. So I'm going to give you guys these plays to show you what I did. And that's the point. Hopefully you guys understand here and on stream. I'm just doing my plays so that you guys can learn from them. I'm not giving you the plays. I'm just telling you what I did. So please be smart, paper trade, and please understand too, option trading is extremely risky. You can't lose all the most financial investment, please for financial educational purpose only. In all seriousness though, be smart with these. You guys could use these, study these. I like to go for plays that have a 1 to 5 risk to reward ratio, so they're low probability. I want them to pay out 5 times the initial investment, so then that way you only have to go 1 for 5, 20% success ratio to break even. If you hit 2 of them, you go 500%, 3 you're up 1500%. That's why we're using small amounts. And a lot of these now, like I said, if you're just starting in, even if on a small account, I still have a lot of profits. I have a decent sized account. I still go in small because these are low probability plays. Do not get greedy. Again, the market will tax you, baby girl. So I'm using that reverse pyramid strategy. But again, these contracts have time. You don't have to do it all in one day. So I even said on one of the plays, I'll show you the BABA, I put in $600, but I said I plan to spend $2,000-$3,000 on that because that's just the first order. We'll wait that week. Again, think about what I'm saying. I'm expecting the bounce up here or even next week. I'm going to use those opportunities and let the market move to establish the position. It's like building up a position with long-term shares. Again, these contracts have time. The market's getting crazy. And this is even part of the strategy now. We want the ones that usually have time. We learn something. All the plays that we purchased from the last Wuhan zone that were down, some of them are down 70%, 80%. They're all positive now, and it's kind of mind-blowing, even some of the old earnings plays we had. But this is what you need to do, is that if the volatility goes nowhere from here, meaning that it still stays volatile, the prices stay elevated so that the puts are still holding up these big gains, and then that's why when the market goes down, they don't really go up as much. You're only getting 20, 30, 50% gains when you should be getting a lot larger, and then when the market bounces, you're losing 50%, and then it comes down again, but then you don't make as much. That's because of the volatility. You have to find the contracts that have not appreciated the most, and that is why now the ones with time, there's tiers when it comes to IV. If you guys haven't noticed, pretty much as you go down the clock, these contracts are going to gain value faster, the ones closer to the money. It's a different case for out the money, and if you play out the money contracts, it's harder to profit out the money contracts, especially far out the money, if you have less time. So you have to kind of go for April. These are the ones that get affected less. So what I'm trying to say is here, it's like if the stock dropped and you bought puts, the February 28th ones are going to go up higher premium than the March 6th and so on and so forth. That's because these ones have less time. So if it's out the money and not gaining intrinsic value, they're going to appreciate the least. So that's why the time kind of helps us here. And then with these volatility and bounces, once they start hitting a month or two, they could lose premium quickly, but still kind of be in the game. So that is the main point. And I said, or wait till pretty much, could you get the ones with time, or you wait till a big depreciation on the short terms, like even the March 20 or the next weeks. But if you do that, you need to get closer to the money. So you can't get caught paying 300-400% on a contract. So here's an example of that. On these Intel, these are March 20th, they might be close to the money, but the point is, last Friday, these contracts were going for 9 cents. You're going to buy them for 70 cents today. That's a 700% gain. That's not it, Chief. It doesn't mean you can't make money. Doesn't mean these won't, we don't know what's going to happen, but the point is, if you try to repeat that over and over and over again, it's a danger zone. That's not really the best thing you want to do. So what we're looking for now is a play like this. This is the first play. I'll tell you the first three. I have specific options play. There's 3 stocks that I like that I made today, because these are what I call my Ginobili players. These are the ones off the bench. Even though the market is dropped, they don't have as much premium. This is what we did with the UAL. But those 3 companies are going to be Intel. We have a contract at April. Alibaba, another contract at April. And then NVIDIA, that one's a March 6th. So that one's a little different. But we spread it out there a little bit. They're all relatively cheap plays. And I only got like one of each, except for I think the Intels, I got a little bit more. No. I think I got a decent. I guess I did. The NVIDIA, I went small. Then I went a little higher with the Intel. And then I went a lot higher with the BABA, so reverse pyramid. So for the Intel ones, we got an April 17th 47 put. I got 5 of these at 30 cents, 150 total. One thing you'll notice here, they still say they're at a premium when some of the puts actually dropped from yesterday, so keep that in mind. But, take a look at these puts, from Friday or Thursday, they were going for 23 cents or 30 cents. Now they're at 120. They're up 400%. We come down to these 47s. Pretty much the other day, they were trading at 16 cents. Even the day before is at like 25. But even from the beginning of the week, there was a trade here on Monday when the market was doing bad. These were 16 cents. We bought them at 30. We're paying 100% difference versus a 300% difference. And I think the same thing with the 48s. These were at like 20 cents. Now they're at 35. The day then they were like 23. So these ones weren't as bad either. But then once you start getting closer on the chain, these were going from 10 cents to 20 cents to 40, but as you start to get closer, you could see the ones closer to the money had a lot of premium. And now why is that like that? This is why this play is still risky, is because Intel is a slow mover. It's a big float. It doesn't move a lot. So that's why a $10 move pretty much on this stock, that's a lot. So that's why these won't gain until it really gets close to there. But also why I like it is because we have time. Again, if we get a drop or a pop or whatever, and we started out with 150, that's why I go small, because I'm cool with losing the 150. I could ride this all the way till April 17th, and we get to play a whole nother 52 days of all of this nuttiness, and you guys are seeing what this week brought. There's going to be ups and downs. So that's why I like that play. But again, going small on it, so even if I lose on it, 2-3 weeks later, when these still have a month of time left, we might be able to come in now and get these 5250s for a fraction of the price now. So strategize. You don't have to hit it right away. And now Intel, after hours, since Microsoft cut their guidance, Intel makes a lot of their chips for their personal computers, so they dropped a little bit, it came up, but that should give us a little IV boost. And this is pretty much why I wanted to do it. Intel was lagging compared to the rest of the chip makers. Even now, that's why I got NVIDIA. It was up a lot, but they're a slow mover. They have exposure to all the China stuff, tech. So we saw what happened even with Apple. They were kind of another one of those big tech chip companies that should have exposure to this. So there's a lot of factors there, but even then at the core level of the pricing of the contract, the opportunity and the time available, that was good. It was good enough for $150 or a small play for me. So that's the first one. The next one, I like this one too. I'm starting with the quality ones because the NVIDIA one was a March 6th, but we got BABA, but same situation. And the difference was BABA's up, 1.3% today. It even closed actually a little bit higher, and they were even up at like 3 or 4% today. It was actually pretty wild. And you could see the Alibaba chart looks a little different than the market. It's actually kind of been bouncing. China's been doing good. You could say it is because of China. At least we know it has exposure to China, and I don't think that's going to last too long, or again, if the broader market gets taken down. But same concept here with Alibaba. We want to find the contracts that didn't appreciate. Alibaba is a big float. It's not one that moves a lot. So these ones further out the money, at some point, it's going to take a real big move for them to gain in value. But we got here the 150s. I got 15 of these at 40 cents. It was like $600 total. So you guys can see here now, why'd I get them? Because even Friday when it started to drop, or even Monday, they're pretty much at the same price. But even from Friday, end of last week, they were 25 cents. So we bought them at 40. It's just under 100% gain. So you see there's volatility. We're kind of forced to pay a premium. It's not saying I'm going to be able to get this cheaper unless I really want to wait. And that's what I always say. You can wait. You have two choices. You could either pay the premium or you could pay with patience. You could say, well, I'll wait, let the contract expire. You don't get a position, and all you'll miss out on is opportunity gains. But then you won't be caught up in positions having money vested in options that are hard to appreciate, and then they put you in this weird situation. So it's up to you to either wait or go there. Again, this one, even though I went bigger, all of these, I would start with one, especially if you have a small account. Intel's $30. This is 40. That's $70. And then the other NVIDIA play we made, that's another $30. That's $100. That's 10% of a small account. So you got to kind of pick and choose, but you don't want to, space it out and give yourself multiple opportunities. But these are the ones I got. And again, same logic there. It has the exposure, it has the time and everything. It's more directly related to China, but I'm picking companies that have exposure as well as now that have reasons to make them cheap, and the fact that they bounce. I'm letting the prices kind of help take more weight here as far as getting exposure. And then lastly, the other put play, and I don't know if I'll actually do this as the put play, or maybe I'll just have to give you guys 4 stocks instead of 3, because the other play we did make today was a HD. And I like that because it's a call, so you could kind of balance it out. But then we got the NVIDIAs, and why I like the NVIDIAs, they were up 4% in the morning. They only went, now they're down to 1.5, but we sniped those early on in the morning. So when NVIDIA dropped, we were able to profit off of it. And I got the next week's because these are going to depreciate, but this one is still super far at the money. We got the 210 put for next week. I got these at 30 cents or 34 cents. So they closed about up 55% here. So this is one you should probably wait on because the volatility is going to be crazy. And that's the best part, though, in a way, because as a few days go by, once these start depreciating, we could average down and get another one. But I got one of those, and I only spent $30 on that one. But then I guess here's the other play I would balance it with. This is why we've been looking at a lot of the value stocks, and if they rotate for some of the bounces, HD had earnings. This could be an earnings continuation. They were doing good. They could be down a lot more considering this drop. They're holding up pretty well. So I think if things do turn around, I think people might pile into there, but we'll see. I still have those Microsoft calls. Those even went down today. But we got these March 20th 260 calls at 36 cents. So they're down to 26 cents. You lost about like 20% on that, or 30%. And that's, again, I only went in with one. And that's the whole point here, is that now you could get $2 closer, but let's let it play out to see what happens, and then we can average down from there. But those are pretty much it as far as other plays. I sadly sold out of my Microsoft puts, took the 400% there, and then I sold out of the UAL, and this one's kind of a good one. I kept half of them, but this is the same strategy we used here on these UALs. I used other puts that I had. I was down on them. They came back to life, and then now the UALs didn't have as much premium. These were the plays that we made. So I made sure I did that through the first Wuhan zone, and those plays even came back to life. Remember, we cut those early, but we would have made we would have made almost 1,000% on both of those. That's kind of crazy. I cut them out early, being conservative there, but we ended up getting these. We got 10 of these the other day for 40 cents of the April 50. So is it too late to get into this? Yes, that's a common question, but because we bought it here at the low, we got these at 40 cents. Oh my gosh, no, I'm even surprising myself. We got the 55s. I was like, no way they're at 130 there, but they went crazy. We got 10 of these. We spent $400. We bought 10 of these at 40 cents yesterday, and this is what I was saying. It's the same concept. Even though it was Friday, we got those on Monday. But you could see here, same exact concept. Even though it was Monday, there was a bunch of volatility on Monday and they were down, but you could take a look after that big drop. These puts only went up 100%. They had more time. They were further out the money. So we were able to snag those at 40, and then what happened? They went crazy, $40 to $200 each. What I did was I sold half this morning at 119. Sold 5 of them, got back like $600. So we still got like a 50% gain on the initial investment, but now I have 5 of these for free with a carrying value of $1,000. And then we still have all of this time on them. So, and you could even ghetto spread them now if you wanted to. So still holding that, but that way you could kind of even see the strategy of that in general. And then I also sold my weekly TLT to take some profits there. And then everything else, we're still kind of holding the rest of the plays. Like I said, I'm positioned pretty firmly on the put side, but I'm still trying to keep my eyes on this bounce, but now trying to find cheap premiums. And sadly, the same thing goes for the calls. The calls are going to be very, very hard to snipe because when the calls do run, they're going to be good. And that's what I'd recommend. If you're going for the calls, we want to get this stuff with a lot of time. So that's where I'm going to start pushing back to maybe April on a lot of these, even May, because given the nature of all these events, they're going to create big moves here. And we have all of these upcoming events with the Fed and everything else. You're going to want time and you want to stretch your dollar. So watch them, watch Intel, watch Guild. They went up. A lot of people have been asking about coronavirus drugs. I wouldn't touch any of them. The only one I like is Guild. They're a real medical company. They have breakthroughs with it. Again, I'm not saying like mRNA and all those aren't, but Guild offers a dividend. It's one of the four horsemen in the pharmaceutical industry. They're more solid, and we got that debit spread. Again, that was another play we were down on. We got that March 20th debit spread, 80.85, and you guys see it's right there almost. So we were already up 200% on that today. If those go in the money, that's a $1,000 max gain off a $60 investment. So still going to hold those. Watch Gilead, watch HD, watch even Microsoft. We'll see if we could even snake some of those. I feel bad that I sold those today, but oh well. Again, watch NVIDIA. They have meat on the bone, Bob and all that. Then watch Procter & Gamble, Johnson & Johnson. Same exact idea with Home Depot, but these guys have been moving and moving steadily. These might be ones. These are slow movers, value stocks. These could be ones we could take advantage of, but we got to wait. And that's something too, even before I'm going to go heavy on puts again. I will tell you, even everything I'm holding now is just free profit. We've already got to cash out a decent amount. The whole thing I'm going to do, I'm waiting for the first big bounce, or once we could at least level out. Even if it cucks, it could level out with contract prices. Then I'm going to go back in. So I'm going to wait for some of these, but these might be ones there. So even though I showed you that strategy there, be careful. Just because it means you might find some, it doesn't mean you always do them. Don't get too trigger happy. So watch them, watch Google. They're going to be more expensive, but like I said yesterday, laggers and leaders, I think they have a lot more room. I think they're lagging behind in terms of the drop, so they might actually come down. They got market cap to give, but they're a little bit insulated from the situation. Watch HYG again. They moved a little bit odd today, but the premium still surprisingly went up, and they're also just an important part to watch out for in terms of bonds and all that. Same thing with TLT, but TLT didn't do what I wanted to do. If it bases up here and holds, that's good, but I sold out that weekly. It was sketching me out. We got the puts because usually at some of these points, if it doesn't break through after hitting a low, bonds are very, very finicky. It might break through a level, then come back, and then take some time before it goes again, or the bonds will just rip through. So that's what we're waiting on. So TLT is still in play. Still have all of those Aprils. Then Polyalti, our 170 continuation play. It's looking pretty good. It's within one standard deviation. It's right there. That plays up like 100%. So I'm still holding it. I didn't ghetto spread it, but you can ghetto spread it with a $5 max gain. And then McDonald's, another example too. Those puts we got those 175 puts for March 20th a while ago. They're up 50%. They were down 80% a few days ago. So this is important, and it's giving us just more adage of how to play and go about some of these plays. And then finally, Beyond, I thought I was going to touch it today. I didn't. The market was still a little bit weird. I didn't feel enough safety yet, even though they were up 5%. They got news with Starbucks, but we will see tomorrow. We saw premiums go up with Booking and some of the other earnings, so that might be the move tomorrow. We still have a big position. We got to see how we're going to finesse that, baby. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need your head in the game. Got to control the helmet. The helmet is your thoughts. What you think is different than what you feel. Emotions and thoughts. Go with what you know, baby. Be smart. Control the budgets. Please, 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 please do not be short-sighted. We got so many opportunities here. All you have to do is stay alive, baby. Let's go, baby. We're fighting for that territory. Let's take it and don't give it back. That includes the money. Let's go.